For months now, the narrative has been that the Bay Area housing market is on fire. But are we starting to see the market shift a little bit? Coming up on this week's Silicon Valley Snapshot. The more data you have, the more information that you have, the better judgment you're able to make on general trends. And so what's interesting is that when you look at a lot of the data that I'm about to present to you today, you're going to start to say, wow, the market looks like it's doing very, 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 very well. And that's true. However, what I'm going to show you is the aggregate data of a lot of different neighborhoods in the Bay Area marketplace. And so that is starting to show a different trend than you might expect. But before we get into that data, before we get into the numbers, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to assist you in your purchase making decision, you can go ahead and text the word data plus the zip code or the neighborhood or the area that you're looking in, and we will get that data set straight to your inbox. And if you're a home seller in today's marketplace and you're looking for a comprehensive data set to assist you in pricing your property now more than ever, pricing strategy absolutely matters. You really owe it to yourself to text the word data plus your property address to the number down below, and we'll get that data sent straight to your inbox. So let's get straight into the data, everyone. What you're seeing on your screen is active inventory measured against pending sales and sold data. And so right now you see for sale inventory, light green graphs, and pending sales are represented in the red line. And that's really what I want to pay attention to. In Santa Clara County, we now have 8 months, 8 consistent months where pending sales have outpaced supply. That is phenomenal news for home sellers. And that is a trend that will not last forever. It simply won't last forever. It is not practical to have that happen for long sustained periods over time. In fact, I don't have this in front of me, but I would argue that in most Bay Area marketplaces, most cities around the Bay Area, we are seeing long stretches of pending sales to active inventory. We're seeing longer stretches of pending sales outpacing supply than we have in probably any other time in the Bay Area housing market history. So this is definitely a white hot seller's market in Santa Clara County. And there's no indication that it's going to slow down anytime soon. We are seeing that's incorrect. In July, we did see where inventory levels were on the uprise and pending sales were on the downturn. However, it's hard to say whether or not that's indicative of a overall slowdown or if that's just a indicator of the typical summer slump that happens here in the Bay Area. This is not new. If you've watched my previous videos in any other time frame other than 2020, where everything got turned on its head due to shelter in place, but even in 2019, 2018, 2017, same narrative, same thing happens every single summer. Don't get freaked out by it. Could this be indicative of more things to come? Absolutely. And that's why you keep tuning into the Snapshot to see if this is going to continue to happen, or to see if this continues to happen, rather. Flipping over to San Mateo County, what you have here are, again, 7 months of consistent pending sales over outpacing inventory levels. And that is going to continue to be the case. I mean, everything seems very stable in San Mateo County. For the last 5 months, we've had relatively stable inventory levels and relatively stable activity levels, pending sales and inventory levels. And there is no indication that that's going to change anytime soon. And so when you look at the San Mateo County numbers, it probably of any marketplace here in the Bay Area, that is the most steady over the spring, like Q2, heading into Q3 now. We're starting to see those numbers stabilize. And that should be good news, whether you're a home buyer or seller, because it just brings more, stability is good for anyone trying to make a decision, bottom line. Right? When things are volatile, it's really hard to predict and you get scared and you get nervous. Now you know what to expect. If you're a home buyer in Santa Clara County, in San Mateo County, this should at least bring some clarity to your decision making, saying, okay, well, I don't see it slowing down anytime soon. I don't see it speeding up anytime soon. So the sooner we get in, the better, because truthfully, 5 consistent months of pending sales outpacing supply, that's indicative of a price appreciation, and not just like a little bit. Like, we're talking a very healthy month-over-month growth in pricing in San Mateo County. Flipping over to San Benito County. Now, San Benito County has been one of these markets that during COVID, it significantly outperformed what we are accustomed to seeing. And now things are just getting crazy, because over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, what? Yeah. It's basically been white hot for the last 15 months, where pending sales have outpaced, say for May of 2020. So for the last 13 months or so, we've had pending sales outpacing supply. And that is obviously, like I said before, indicative of a strong seller's market. Not surprising when you get a lot of people coming from the peninsula, when you get a lot of them coming from the South Bay, moving down, getting more property for a fraction of the price in and around the same neighborhood or the same area, the same location that they were used to living in before. This makes perfect sense as to why this market is doing so well. But the fascinating thing is what the inventory levels have been doing over the last couple of months, where we see now in June, July, pending sales if you had to draw an average or a mean line, I'd say it's probably about average where we're used to seeing pending sales. What's different though is the uptick in inventory levels. Now, the thing is that it's not high inventory relative to where it was a year ago. It's high inventory relative to where we were 3 months ago. So that's something to keep in mind. I mean, this is not an alarming number. Granted, I mean, we're still in the we're still in the green, meaning we still have way more pending sales not way more, but we have more pending sales than active inventory in San Benito County. And I expect that buffer to hold for maybe another month or two. We could see things start to dip in August, but again, it's a little too early to tell if that's going to happen. But in July, for sure, we've seen pending sales outpace supply, and we should continue though to keep an eye on the inventory levels, just to see whether or not those continue to climb and rise. If they stay steady, if they rise, then yeah, we could start to see the market pull back just a little bit and neutralize. Flipping over to San Francisco. San Francisco, again, much like San Mateo County, very steady and stable. Yes, we have pending sales we have less homes pending than on the market. However, the absorption rate, meaning the amount of homes that are pending relative to the amount of homes that are active, is well above 33.3%, which is what economists would consider a neutral market. We are well above that. And so this is a very healthy market. And if you're an investor, this is the place to park your money. I don't see San Francisco getting better anytime soon. Frankly, politics aside, I'm not going to get into that on this video. The city, I think it's very obvious. It's just not doing that well right now. It could be many years until the city gets back up and running and really, comes back to where it was pre-COVID. But right now, even though it's a steady market, it's a healthy market, there's still so many opportunities there. And the only reason why you wouldn't want to invest there is because of the strict rent control policies. But if you can find an opportunity where you don't have any tenants inside the property right now, and you can buy the property, fix it up a little bit, and then have renters come in, people are starting to come back to the city. They're starting to come back, and that shows in the demand. I mean, the demand is a little bit up to where, I mean, if you look at May and June of last year, 323, 457. Now we're at 549 homes pending. So we're seeing more activity in San Francisco now. People are starting to come back. And I expect that to be good, a good thing for the San Francisco housing market. Maybe not next month, maybe not next year, but then in the next 2 to 3 years, or 2 to 3 to 5-ish years, anyone who bought a home right now in San Francisco, I guarantee you, is going to be rich. They're going to be rich. San Francisco is San Francisco, and it will return back to its glory days eventually. And anyone who buys now will be thanking themselves. Let's head over to Contra Costa County. Now, Contra Costa County, Alameda County, these are the numbers here. I'm not going to spend too much time here because honestly, both of these counties have been significantly outperforming even my wildest expectations. And that is a result of a lot of different things, but truthfully, the pandemic helped these markets because a lot of people left the Mid-Peninsula. They left San Francisco. They left the South Bay where they were getting priced out consistently, and they went to greener pastures, right? They found the greener grass and they liked it. And now there's no stop. I mean, to stop this train, to slow it is possible. To stop it, dead stop, impossible now. There is too much buffer between pending sales and inventory levels for us to overnight experience a neutralization in the marketplace. A neutralization, to neutralize either the Contra Costa County or Alameda County marketplaces, you look at just the delta between the red and the light green. I mean, it is absurd how much room there is there to even get to 100% absorption rate. And then it'd need to dip 67% additionally in order to reach neutral market territory. And so with that much buffer, we're talking a 6 to 9 month lead time where keep in mind, 6 to 9 month lead time to where we'd start to see things shift to where we'd experience neutral market where like homes are selling for like under asking very, very repeatedly, and like homes and the pricing starts to dip month over month over month. We would be 6 to 9 months. There'd be a 6 to 9 month lead time where in the meantime, as that happens, homes would appreciate, yes, at a slower rate. But if you're thinking about buying in the East Bay right now and you're thinking, I'm going to wait for the market to shift in Alameda County, in Contra Costa County, in Santa Clara County, in even San Mateo County, you know, in these marketplaces, San Mateo, Santa Clara, I mean, we're talking maybe a 3 to 6 month lead time, and in Alameda, Contra Costa, a 6 to 9 month lead time on appreciation during a stabilization period. That is how much time you would have to continue to build equity before anything is felt. And so, and in that time frame, by the way, just realize this: if you're a home buyer in today's market and you're thinking about it and you're like really trying to do the math, like that 6 to 9 month lead time would buy you more than enough buffer, if you will, to sustain any sort of correction that would occur after that lead time is done. And I'm not saying that it's done. There are signs though, if you're looking at the data as a whole, that show, hey, we're starting to see that gap decrease between pending sales and active inventory. And that's the graph that I'm going to show you right now. This is a little bit different than what you're accustomed to seeing. This is all the data for all of MLS listings, which comprises of San Benito County, Santa Clara County, San Mateo County, Monterey County, Santa Cruz County. I might be missing one, but at least those 5 counties. So we don't really cover Monterey or Santa Cruz consistently on these videos. But if you look at this data here, you'll see that in March of this year, we started to see that gap starting to just come together ever so slightly. And this is a trend. Like, you can see this very evidently in the data that we're starting to see pending sales and active inventory, that delta decrease. Here's the thing though, okay? For anyone that's saying, I told you it was gonna happen. Okay, well, you have to understand, first of all, what we're talking about is that pending sales and inventory levels are finally coming to become one, which in every market in the country and every market in the world is a great market. 100% absorption rate is amazing. Means that the month the home comes on, it sells. That's clockwork. That is strong seller's market. Not just like kind of strong, not just like stable. We're talking not white hot, but maybe like blue hot seller's market. So we're still not there yet. We're still in a white hot seller's market, but this trend could continue. And so now that we're establishing that this is the trend, obviously in July, we're used to seeing a decrease in absorption rate, I should just say, right? Any way that either then coming together or moving apart, depending on, if it's above or below active inventory levels, pending sales. So now we need to continue to pay attention to this line. And that's why you're going to continue to tune into the Silicon Valley Snapshot, because I'm going to continue to monitor this and share this with all of you. This is interesting. This is very interesting. By the way, I did not pull this for the East Bay counties, because truthfully, those counties are on an island of their own right now. They're outperforming, and that marketplace will only become impacted once this marketplace is truly showing signs to the public of a slowdown, because the buyers in the East Bay that are the carnage that's going on right now, they're going to start coming back down to the South Bay saying, oh, well, I have more opportunity now where I actually work. I can now buy a house without 30 other offers on the property. That is what's going to happen. Is it going to happen anytime soon? Time will tell. But I can guarantee you that this delta, this buffer right here is good till at least the end of Q3, beginning of Q4. So we're talking November, December at minimum before we reach homeostasis, if you will, 100% absorption rate. There's still plenty of buffer there. There's too much movement that needs to happen there for it to happen over one month. So continue to tune in. And this is fascinating stuff, everyone. This is fascinating stuff. So again, if you're a home buyer in today's marketplace and you're looking for a data set like this in your community that you're looking in, again, this is all over, the data is all over the place depending on where you're looking. And in some areas, it's actually a great buyer's market right now. So wouldn't you like to know? Text the word data plus the zip code or area or neighborhood that you're looking in, and we'll get that sent straight to your inbox. If you're a home seller in today's marketplace and you're looking for a comprehensive data set to assist you in pricing your property, again, you can text the word data plus your property address and we'll send that straight to your inbox. And this is a 20-minute video. If you're still watching this video, we've got 6 of these hats before I order a new stash. I'm getting sick of these. I want new hats. So go ahead and text the word hats to the number down below and you'll get a free SSV hat. This is Danny Gould, everyone, with Selling Silicon Valley Group, and I will catch all of you in the next video.